Do you think markets are having a fairly muted reaction? I mean, sterling right now is flat versus the dollar. We had seen a little bit of a bounce this morning, and you look at the gilt curve, and there's not a huge amount of action there either. Why aren't markets putting that much weight on these developments?
Because I think there are a much wider economic data which is having a bigger impact on markets. If you think what's going on with inflation, with expected rate hikes, arguably these are the things that would have a much higher impact on the direction of gilt markets. I mean, about 80 to 90% of the moves are driven by interest rate expectations. So at the margin, they may in the future, as I say, increase demand and supply, but it's at the margin, and I think for that reason, the markets are not taking it as a huge amount of news.
Fair enough. And I mean, I suppose when you think about the implications for markets of this deal, we had Callum Pickering from on Squawk Box earlier today who made the point it's not just about this deal, but what it might signal about the direction of travel. So maybe more medium-term implications then, that if we do see an agreement and a coming together of the UK and the EU now, then it could pave the way for a more favorable relationship in the future, which might have longer-term implications for markets. Would you support that view?
Yeah, possibly. I mean, arguably, each of the deals are or situations in markets can be completely different. The Northern Ireland, Southern Ireland issue's been going on hundreds of years. The Good Friday Agreement, which was 25 years ago, doesn't want to be ripped up. If anything, the Tories might struggle to get their own party back in, but they will get back in from the Labour Party. The Labour Party have already indicated that they don't want to play party politics here. So I think the Irish situation is probably a lot different from many other things that might be going on in Europe. So on the one hand, you could say it's positive, but on the other hand, other issues might be completely different.
Fair enough. Well, let me come back then to your point about what is driving UK markets right now, and that is largely what's happening on interest rates. And, looking back at the last week, the narrative that's taken hold of markets appears to be this anxiety resurfacing in the U.S. over Fed tightening and the impact of tightening on U.S. growth prospects. Has there been any substantial read across, in your view, from the data we've seen stateside and the repricing we've seen in Fed rates markets?
Yeah, I think so. I mean, I was a big advocate of the fact that the weather was pretty bad in December. I'm a big NFL fan, and I just remember watching most of the stadiums being half empty because of the weather. And I wasn't a great believer in the drop in PMIs in December. So this kind of rebound that we saw in January, I think, was pretty much weather related. And we had the same in Europe somewhat, but less so. I mean, Europe was much milder winter than usual. So there has been a read across because the gilt market and the bond markets have been very weak as a result of the US Treasury markets being weak. And let's not forget, the Fed are going to want to try and control the excess liquidity that was put into the system, which, if you look back, was quite excessive. I mean, in some cases, about 12 times the size of what we saw in GFC. That they've got to drain that liquidity from the market. And also, while the employment markets are very strong, that will continue to create income growth and create sticky inflation. So the old adage of "don't fight the Fed" seems to have been read last week, and we've got to wait really for the Fed to telegraph that they are going to go on hold. And let's not forget, inflation in the UK is still in double digits. Everyone was cheering and jumping up and down, saying it was coming down, but double-digit inflation is still very high. So I think the Bank of England are also under pressure to continue to try and stymie that kind of level of inflation.
What's your expectation for the Bank of England? What more do they have in the pipeline?
Yeah, it's slightly different from the US. Consumer-related economies of the US, with labour markets so strong. The labour market's still quite strong in the UK. I still think the Bank of England are going to have to continue to hike. Align with the market, maybe a bit more. I've always wondered, we've got base rates, relatively high here, and yet the gilt market's trading through that. I still think the gilt market needs to have a higher yield. So I think the Bank of England have got a bit more in the arsenal to do.